your boy Nature, aka Nature. Alright, gang, so we back for another video. In this video, we're going to be going over quizzes. Alright, so we already ran over all the information. Information is everything. We already ran over all the information as far as about, making money as far as in Forex and trading. We're going to go a little step further now, and we're going to do quizzes. Alright, so this is Fibonacci quizzes. Let's start the quiz. Alright, so gang. Alright, so Fibonacci ratios are used a lot in Forex trading, so you better make sure you know all about them. We're going to brush up on all the subject matters by taking a short test, a short quiz. Alright, so let's start the quiz. It's 15 questions. We're going to get a 15 out of 15. Alright, so a swing high is a candlestick at least of 2 lower highs on both the left or right of itself, at least 2 lower highs on the left of itself, or at least 2 higher lows on the right of itself. If you said that the swing high is a candlestick with at least 2 lower highs on both the left and right of itself, you are correct, okay? A swing high is a candlestick with at least 2 lower highs on both the left and the right of itself. Which of the following is not a Fibonacci retracement level? So we know 6.18 is a Fibonacci retracement level, 3.82 is a Fibonacci retracement level, 0.212 is not a Fibonacci retracement level, okay? It's actually 0.236. So which of the following is not a Fibonacci retracement level? It was 0.212. The Fibonacci retracement levels that you have to know are 0.236. Okay, it was 236, not 212. Okay, so the Fibonacci retracement levels are 0.236, 0.382, 0.500, 0.618, and 0.764. Alright, so we already went over that, gang. Alright, so these are the Fibonacci retracement levels. Alright, so when the market is in an ideal uptrend, or when the market's in an uptrend, you will ideally go short or on a retracement at a Fibonacci resistance level, stay out the market, or go long or buy on a retracement at a Fibonacci support level. Okay, the market's going up, you're going to go long and buy on a retracement at a Fibonacci support level. Okay, the Fibonacci tool works best when the Forex market is trending. Okay, the idea is to go long or buy on a Fibonacci, on a retracement at a Fibonacci support level. Okay, the idea is to go long or buy on a Fibonacci retracement support level when the market is trending up, and then go short or sell on a Fibonacci retracement or to go short or to sell at a Fibonacci retracement when the market retraces back at a Fibonacci resistance level. Okay, so when the market is trending down. Okay, so the idea, again, when the market is going up, is to go long or buy on a retracement at a Fibonacci support level when the market is trending up, and then go short or sell at a retracement at a Fibonacci resistance level when the market is trending down. All right, so y'all already know this. We went over this already in the Fibonacci's session. All right, so that's correct. The Fibonacci retracement tool works best when the market is trending, ranging, or choppy. While we know that the Fibonacci tool works best when the market is trending. Okay, Fibonacci tool works best when the market is trending. Fibonacci's level give you a blank probability of success, but they blank don't work. Okay, Fibonacci level give you a lower probability of success, but they don't always work. Fibonacci levels give you a higher probability of success, but they never work. Or Fibonacci level give you a higher probability of success, but they don't always work. Okay, they don't always work. Fibonacci levels do give you a higher probability of success, though. Okay, but they don't always work. All right, so Fibonacci tool should be used by itself, never be used, or it should be used in combination with other tools. Fibonacci tool should be used with combinations of other tools, because just like any other tool, any other Forex technical indicator, these tools are not always 100% valid. Okay, they are foolproof. Okay, meaning that you have to combine the tools with other tools, okay, to give you a higher probability of success. Okay, so Fibonacci retracement tools should be used in combination with other tools. One of the best ways of using the Fibonacci tool is in a liquidated market, determine the potential support and resistance, or in a ranging market. Okay, one of the best ways to use Fibonacci tool is to determine the potential support and resistance level. That's what Fibonacci tools are for. Is one of the best tools to determine when to get in the market at a potential support or resistance level. Okay, so one of the best ways to use Fibonacci retracement tool is to spot potential support and resistance levels to get in. and to see if they line up with the Fibonacci retracement levels, okay? The potential support and resistance level should line up with the Fibonacci retracement levels, okay? Depending on your uptrend, it's going to be you're going to be looking for resistance levels. I mean, depending if you're in the downtrend, you're going to be looking for resistance levels, and you're in the uptrend, you're going to be looking for support levels, okay? But these are one of the best ways to use Fibonacci retracement tool is to spot potential support and resistance levels and to see if they line up with the Fibonacci retracement levels to enter a trade to get in for potential trades, okay? So the Fibonacci tool goes well with trendline analysts, nothing at all, or high leverage, okay? Trendline analysts, they go great with trend lines, okay? It's another tool you can use is trendline. A good tool to combine with the Fibonacci retracement tool is trendline analyst. After all, Fibonacci retracement levels work best when the market is trending, so this makes a lot of sense. True or false, you can use the Fibonacci tool to help you find potential entry points. Yes, true. That's what the Fibonacci retracement is about. It's about when you're finding, once the price retraces back, once you use the Fibonacci retracement, to find out when to get in for potential entries, okay? Rather it be support entries, to get in off of Fibonacci retracement for support, to get in for support entries or resistance entries, okay? That's what Fibonacci tool is used for, to help you find potential entry points. If you see that the trend is developing, you should be looking for ways to go long to give you a better chance of profitable trade. If it's trending up, you should be looking for ways. You should be waiting for Fibonacci to retrace back to a support level, okay? So it's good for potential entry points, okay, to get in for sniper points. That's what we use Fibonacci retracement for. You can use Fibonacci retracement tool to help you find potential entry points. If it seems that the price is selling at a fib level, chances are that other traders may have put some orders at that level, may have ignored these levels, have may drawn a swing high at these levels. So you see a lot of stalling going on at Fibonacci retracement levels, chances are that other traders are, putting in some orders at those levels. You're not the only trader putting in orders at those levels. So it seems that the price is stalling on a fib level. Chances are that there are other traders that may have put some orders at those levels. This acts actually as more confirmation that there is indeed some resistance and support at those prices, at those levels, okay? If a fib stick forms right below or right above the fib level, you just enter a trade. You can just enter a trade at the market price since you now have more confirmation that the levels could be holding, okay? Not breaking, not ranging. When you see more Fibonacci, you see the level holding there. It's just like the last question. This gives you more confirmation that buyers or traders are in that, are looking at those levels and that those levels could be holding. Okay, so you see a fib stick form right below or above the Fibonacci retracement level, you can just enter a trade at the market price since you now have more confirmation that those levels could be holding. Okay, in an uptrend, the general idea is to blank on a Fibonacci, a blank trade at the Fibonacci price extension level. So in the uptrend, the idea is to take profit long on a trade at a Fibonacci. Is to take profit on a long trade at a Fibonacci price extension level when it's going up. Okay. Vice versa, when it's going down, you will take shorts on a trade. You will take profit on a short trade if the market was trending down. Okay, so for uptrend, the general idea is to take profit on a long trade at a Fibonacci price extension level. We went over this already. All right, so in a downtrend, the idea is to take profit short on a Fibonacci price extension level, okay? So in a downtrend, the general idea is to take profit on a short trade at a Fibonacci price extension level. The true or false, as much as possible, you should rely solely on fib levels as support and resistance points as basis for stop loss placements. True or false, as much as possible, you should rely solely on fib levels as support and resistance points as the basics for stop loss placement. False, okay? That's false. You shouldn't just rely on, I had to read that. You shouldn't just rely on Fibonacci levels just because you have the Fibonacci retracement and you believe that those levels are going to hold. No, you need to combine the Fibonacci retracement tool with support and resistance, trend lines, candlesticks to find better entries. Okay, it will be at best to use all your knowledge of all the tools, and to analyze the current environment to help you pick a good stop loss point as much as possible. You shouldn't rely solely on Fibonacci levels as support and resistance points as a basis for stop loss placements. Okay. All right, with wider stops and without reducing your position size, you may, with wider stops. Okay, so with longs, you push your stop loss all the way up there, so you have a wider stop, and you never reduce your position. You still have the same position, and this may occur, to larger losses. Okay, you have to reduce your position, okay, until you actually find what the trend is doing. Okay, or that's going to occur to larger losses. Okay, so with a larger stop, you also have to remember to adjust your position size accordingly. If you tend to trade the same position size, you may incur large losses, especially if you enter especially if you enter early on one of the Fibonacci levels. You've seen what that happened in our Fibonacci videos already we went over. Okay, when you get in a trade off a Fibonacci level too early, this could lead to unfavorable reward risk ratios, as you may have a wide stop. Your position size, especially if your position size is and you're on the wrong Fibonacci level, and that could lead to unfavorable reward risk ratio. So it's important that you reduce your position size. Okay, this as you may have a wide stop that isn't proportional to the potential reward. Okay, so all right, gang. I hope these quizzes help. I hope these videos help. We got an utter profession. You got a 15 out of 15, correct? So 100%. All right, so we're gonna do more videos, gangs. All right, so this was Fibonacci quiz. All right, so gang.